You ready? You got me running. Shake it, shake that. Raise your hands up. Raise them out.
All right. Hi, everyone, and welcome to the live daily currency call presented by Forex Trading Asia. Thanks for joining us again, and hello to all the LCMS Traders Club members that are joining us on the live broadcast right now as well, just past 11 o'clock GMT +8, and it's the 8th of November already, 2021. So just to start us off here, quick introduction. It is episode 413. And if you are watching this later in the day and it is your first time, a quick introduction. The currency call is done every Monday to Friday at 11 a.m. GMT +8. And the currencies we analyze are as follows. Mondays, we do the Aussie and Kiwi. Tuesdays, the Euro. Wednesday, the Pound. Yen and Gold for Thursday. And then on Friday, we do CAD and cryptocurrency. And this currency call will provide you with the market economic updates, the key support and resistance levels, trade ideas, and much more, including today. We do have a breakdown of the NFP that happened on Friday night with Kim Hong as well. And in this currency call, we will discuss things that will offer benefits to the long-term investors and also the short-term traders. And we'll go through what could move prices, possible trade ideas, and we'll also highlight the potential targets and risks as well. So finally, a disclaimer. Any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Now, to kick us off, we do have Gimme here, currency strategist at LCMS Traders, and he'll just be discussing what happened with NFP on Friday night and what it means for some trading opportunities as well. So over to you now, Gimme.
All right, thank you, Scott. Happy Monday, everyone. What have we here? A very strong, well, I wouldn't say very strong, but a reasonably strong jobs report coming from the US Bureau of Labor Statistics. All right, let me show you the data. Okay, so 531,000 jobs will be added for the month of October. Okay, that is, I would say, a pretty strong figure. Okay, I mean, previously we have seen something like 100 over 1,000 jobs being added for the previous months. So it was quite disappointing, but after 2 months of disappointment, okay, actually it wasn't that much of a disappointment because I will just let you guys know about it. Why is it that case later on? All right. So yeah, after supposedly 2 months of dismal jobs report, okay, jobs figure, we are seeing a strong one this time around. Okay. I think partly is due to because a strong decline in COVID cases in the US. Okay, just a quick one. I'm just going to show you guys the COVID cases. So ever since it actually peaked in, I think, mid-September, all right, we see like the 7-day average is like 175,822 cases a day, okay, and ever since then, okay, cases has been on a steady decline, I would say, all right. At the moment, we are only seeing a 7-day average of 73,148 cases, okay, which is like almost like a 2.5 times lower, okay, than back in September. All right. So yeah, because of this issue, because of this declining in number of cases, we are actually seeing more activities, more economic activities opening up in the United States. All right. People are able to go back to their jobs earlier, all right, and it's safer to do so right now. Okay, so 531, a very, very strong figure. Okay, yeah, like I mentioned earlier on, the past 2 months has supposedly been disappointing. Why supposedly? Because we actually see an upwards revision. Okay, so I think I'll just go straight to the report so you guys can see it clearer. All right, for the month of August, okay, the number of jobs being added was revised up by 117,000, all right, from 366 to 483, okay? And then for the month of September, it was revised up by 118,000 from 194,000 to 312,000, okay? Now, based on these 2 months alone, we actually have a total of 235,000 upwards revision, okay, number of jobs being revised upwards, all right? So that is actually a very, very positive news on top of the very, very, very positive jobs report, jobs figure for the month of October, all right? So we are actually seeing something like a total of 500 over 1,000 jobs being added, okay, in the records, okay? So, which is why, we actually saw the stock market rally, when it opened up at, I think, 9:30 GMT plus 8 last Friday, okay? So yeah, overall, very strong figure coming in from the Bureau of Labor Statistics, okay? Moving on to unemployment rate, we also see a slight decline in the unemployment rate, all right? Previously it was 4.8, market sentiment was, expecting something like a 4.7, and then we actually got a 4.6%, which is good, okay? Average hourly earnings remains the same. I mean, as in the rate of increase, it remains the same at 0.4%, as forecasted, all right? So all in all, we are actually seeing these three main indicators being strong, okay? But I would like to bring your attention to one indicator that seems to does nothing, all right? There's no change, okay, which is the participation rate for October, okay? So, yeah, participation rate actually remains at 61.6%. This can actually be, well, this is actually an issue, personally, I feel, okay, because what this means is that the workforce hasn't been growing, okay, meaning the number of people in the workforce either being employed or are currently looking for a job hasn't increased, okay, because if we were to look at the pre-COVID, I would say pre-COVID chart, all right, over here, okay, we are seeing something like some 63.4% for the month of March 2020, all right, before it starts declining, okay, and ever since it so-called recovered, okay, we are seeing participation rate to range around 61.7, all right, so we still have, well, they still have some quite a distance to go before hitting 63.4, okay. What this means is that there's some 2% of people, okay, who either has already retired, okay, or are not coming back to the workforce, okay, at the moment, right, for whatever reason. So what they want is to see maximum employment, right? So before maximum employment can be reached, we need people to actually put in the effort to actually look for jobs, okay? Because if people were to leave off the stimulus given by the Congress, okay, issued out by the US government, and then not looking for jobs and things like that, not having an income, then, the jobs market is not very good, right? It's not looking good because, people who can work are not working, all right? So this is an issue that they are facing at the moment, although we are seeing strong jobs figures, because we know that in the future, all right, at some point in time, jobs figures are going to stagnate. Okay, and this is probably going to due to the lower than pre-pandemic level participation rate that we are seeing over here. Okay, so okay, nonetheless, all the negativity aside, we are seeing a strong, I would say, strong jobs report. Okay, this time round, the main driver, okay, of the strong increase in the number of jobs, you guys can pretty much guess it. All right, it's the leisure and hospitality sector, all right? So let me show you the report again. So we are actually seeing some, let me get the search leisure and hospitality. Yep, over here we see that, they actually mentioned with notable job gains in leisure and hospitality, and also in the professional and business services, okay? By how much? Let me just show you straight over here. 164,000 jobs are being added. Okay, so we are actually really seeing a strong opening up in economic activities. Okay, if you go into deeper into the report under leisure and hospitality, you will see that it's being subcategorized into different small categories such as the restaurants and things like that. Okay, so that's for the main driver of this strong jobs report. All right, and we can also see that government under the government sector, okay, there's actually a decline of 73,000 jobs. Okay, not very sure why, but again, if you were to look deeper into the report, all right, there's actually a strong decline in the number of jobs coming from the local education. Okay, not very sure why is that the case. All right, because from what I know, the number of schools that actually resume in-person learning has been increasing. Okay, it just happens that maybe there's not as many educators joining the public education sector, okay, as before. All right, so we will just have to see how it goes from now on. All right, so labor participation rate has remained the same. I think there's one chart that I would like to show you guys is this. Okay, so I tabulated as usual, okay, and updated the figures for the US employment rate since the pandemic strikes. All right, at the moment, we are still seeing some 4.3 million jobs away from the pre-pandemic level. Okay, so I think this has been quite a while, especially this month. Okay, this month we actually seen like some 700 over 1,000 jobs being revised upwards, including the gains coming from October. Okay, which actually brings us from the previous 5 million jobs to the current 4.3 million jobs away from pre-pandemic level. Okay, now bear in mind that this is still quite a distance away. All right, if we are going to see some 500 jobs being added into the US economy on a monthly basis, we still probably need like some 9 months to go. Okay, which actually, you know what, if this goes on like that, all right, then it will actually tally with the Federal Reserve's forecast that the tapering will end by mid of 2022. Okay, mid next year. All right, so if that were to happen, all right, then chances are we can actually expect an earlier than expected rate hike coming from the Federal Reserve. Okay, so we'll just see how it goes from now on. Okay, I'm pretty much sure that Jerome Powell must be smiling from year to year with the strong jobs figure, being released last Friday. Okay, and also, sort of like prove that the point that the Federal Reserve has been, has pointed out recently that jobs market has been making substantial progress. It's just that they are waiting for the jobs market to achieve maximum employment, all right, before actually considering a hike in interest rates. Okay, but until then, we still have like some 6-8 months to go, for the Federal Reserve to actually finish its QE tapering. All right, so with that, overall strong report. Okay, we've seen a strong rise in stock markets. Okay, in the 3 major indices, US indices last Friday. Okay, which actually personally I believe led to a decline in demand of the US dollar. All right, which is why we see a decline, a weakening in the US dollar last Friday. When we have the strong non-farm payroll coming in. All right. So if you guys are wondering why US dollar actually weakened against the major currencies, pound, euro, Aussie, Kiwi, CAD, yen, francs, last Friday, okay, when the report was released, that's probably the reason why, because there's a temporary decline in demand of the US dollar. All right. Let me see if there's any question. Okay, no questions for now.
So Kim Hong, with your chart and your projections of the non-farm payroll numbers, when will you get to the point where you can accurately predict non-farm payroll numbers for us?
When we can actually what?
When are you able to start predicting exactly the non-farm payroll numbers?
Predicting exactly. You see, that's
okay, in a 10,000 ballpark. That's all I need.
Oh my goodness, it's okay. I can't give my prediction, but trust me, it's not going to be I don't think it's going to be useful. It's going to be constructive, because unless you guys are going to trade non-farm, like, what do you call it, proactively, okay, which is, you're going to predict the figure and enter a trade before the release of the actual data. Otherwise, it's not going to be constructive. All right. And from time to time, we have seen analysts on Wall Street, even from Bloomberg, from Wall Street Journal, forecasting figures, but many times, they just miss by quite a lot. Okay. So yes, okay, maybe the next time around, I'll give you guys my personal, forecast for the jobs report, jobs figures. But yeah, it's just take it with a pinch of salt. It's unlikely going to be very accurate. Even if it hits, the accurate figure, yeah, it's going to be by luck. I'm just going to be humble. It's just going to be by luck that I'm going to hit it.
Watch out for it. 3rd of December, Kim Hong's prediction of the non-farm payrolls. 3rd of December in the Traders Club only. It's all done by projections and back testing.
Yeah, of course, I'll give you guys my projection, but just to give you a pinch of salt. Okay, back to you, Scott.
Thanks, Gimme. I just noticed Steve does want to know why the NFP number gets revised once the initial figure comes out.
Okay, so as we know that the non-farm payroll data is actually being released on the first Friday of each month, so it's most of the time it's within like 5 days from the end of the month. Okay, so the reason why there tend to be revision, okay, sometimes major revision, okay, as we can see from the past few months, okay, first of all, it's because of data discrepancy. All right, so whoever's doing the survey, Bureau of Labor Statistics, okay, they have been compiling data from time to time and things like that. So from time to time, there will be discrepancies such as the the lack of accounting of certain certain sectors and things like that. Okay, so that's one of the main reason. Okay, the second reason, okay, is, as you guys probably can guess, okay, is because of COVID. So with COVID, there's probably shortage of people, working to compile figures, okay, which is why the initial release, which is the first Friday of the month, okay, data tends to be very highly, highly subjected to revision, okay. So, giving them more time, like 1 or 2 months down the road, that will actually, sort of like give them more time, right, to actually compile, to make sure that the data accuracy is there, the data integrity is there, to clean up the data, to massage the data before what I would say an accurate, highly accurate data can be released. Hence, we get revisions of data. So from my understanding, okay, they usually revise data up to the previous 2 months, okay, which is why I showed you guys the BLS report, the jobs report, okay, which is my preferred go-to source of revision, because I would personally prefer to go straight into the official source rather than just going to economic calendars where they actually only show you the previous month, but not 2 months back. So yeah, if you want to talk about accuracy, that's the most accurate we can go, which is the jobs report from the BLS. All right. Okay, back to you, Scott.
Thanks for that, Gimme. And just rolling into the US dollar now, guys, as well. And we did see what was interesting to note, just with the chart up here, thanks to Sam Trade, is that we saw before the NFP, that's where really the movement was made. And it was interesting because that was really the main, movement against really the release, which saw a volatility, obviously, but then we did see some selling off as the market digested the figure, frankly. And we did see some stability. and 94 flat still held. And we are seeing currently the US dollar is pretty steady. And from a news perspective as well, we don't really have a lot of news out today. We do have some FOMC members speaking later in the evening, GMT +8. So that is something to really watch for. We do have Clarita speaking from 10 o'clock tonight, GMT +8, and there's quite a lot of that going on. But, you know, from what I can see here, Tuesday, and I'll just go to the economic calendar as well. I mean, there's still definitely a long bias here, is how I'm seeing this on the US dollar, because we're progressively getting better and better with this jobs figure, and that we are slowly seeing the COVID-19 hesitancy is getting a little bit better as well. So in regards to taking vaccinations, and they've also brought out that Pfizer pill as well, which is not seen as a complete cure or anything like that, but it is set to really help from the studies that I've seen, which was around 750 people. It showed it prevented hospitalizations by around 90%. So that's something to consider as well, because it just looks like a lot of people in the US aren't really that keen to take the vaccination. So this might help, and then help people want to return back to work as well. But in regards to the news for tomorrow, besides the FOMC committee members speaking tonight, what will be interesting is the PPI month on month. We've got expected 0.6. For last month, it was 0.5. So be interesting to see what happens there. And then as we scroll down as well, we do have on Wednesday night from 9:30 GMT +8, we do have the core CPI ad as well. So Monday, a little slower day, and we'll just see how the other currency pairs behave against the US dollar. But from a index standpoint, you know, when things are like this, you know, there are opportunities that do present, but you just have to be a little more short-term focused, and definitely be able to watch the trade, because things can, you know, move around a little bit when there's no news, and it can get a little bit difficult. So just make sure you have those levels in play, no matter what currency pair you are trading. And if you are a club member, feel free to ask in the trading floor chat or the various currency pair chats, and we'll help you out as well. But really, for the US dollar, I would just say, you know, Wednesday should be quite interesting, and just to see if we can get a little bit more of buying present, because currently, even if we get back to 94 lows, which would be good, and then we've got a little bit more value there. If we do see that inflation come out a little bit hotter than expected again, some nice buying opportunities could be present. But for now, I would say just, you know, we've got the Aussie and the Kiwi in focus now with Jin. So let's see what's happening with those pairs, and we'll see how the week goes. But that's it from me, guys, on the US dollar index. And up next, we do have Jin here as well, and we'll be just discussing with him the Aussie and the Kiwi, and the economic news as well that's around to pay attention to. So over to you now, Jin.
Thanks, Scott. What's going to happen to the Aussie and the Kiwi? Well, it's going to be an interesting week ahead. Why I say that is really because looking at the Forex Trading Asia economic calendar here, not much happening today with the focus on the Aussie and the Kiwi dollar, not much happening today. I think the focus, even tomorrow as well, I think the main thing is we're looking at Wednesday with the US CPI number month on month, looking to increase slightly from a 0.4 to a 0.6%. But look at the core CPI number year on year, staying well above that 4%. At this point, the FOMC has come out and said to some level, to some degree, that they're not too concerned with inflation at this point. You know, they have taken some steps. They do think that it might be transitory. It might take a bit longer to bring it back down again, but they're not super concerned. But I think that if we do see CPI numbers at that 0.6, possibly around 0.7, core CPI number looking at a 4.3%. We might see some dollar strength come back into play on Wednesday. That would affect the Aussie dollar and the Kiwi dollar on Thursday. So later into the week, we have the Aussie employment data to be released. Employment change looking to go from a minus 138K to a plus 50K. At this level, I think that I'm not looking for a big change here. Swinging from a minus 138 to a 50 would be a good number. I think that we might even see about a 40 something here. So still looking at some positivity for the Aussie dollar, with the unemployment rate going up slightly from a 4.6 to a 4.7. So I'm seeing a bit of a mixed bag here early Thursday morning, 8:30 a.m. For the Aussie dollar. I think that we might see some volatility there, but I think that in general, we might see a bit of strength on the Aussie dollar. It is going to be quite pound focused for this week. Look at the GDP numbers to be released. I'll tell you more about that on Wednesday. And then on Friday, you can see business PMI numbers above that 50 number, looking to stay above 50 for New Zealand. And then not much news to happen after that, or not much big hard impact news to happen after that. So you can see that there's a lot of news for this week, but not big impact news. No central bankers coming out talking, not big changes likely to happen. What the data is going to be released this week looks like it's going to be data to support any moves or any existing moves that are happening. So what that means is, looking at the charts here, it might actually make trading a little bit easier. If the data does come out as aligned or as expected, what we could see here for the Aussie dollar H4 time frame currently is sitting at that 7395 level, or very close to that 74 level. Indication is that we might see some bounce back up. I'll draw that. We might see some bounce back up, some profit taking, some reverse, some testing of this resistance. But I think that, as Scott was sharing, if we do see the dollar reverse back up towards that 94.53 level and possibly even higher, what could happen here is a test before breaking that support back down again. So what I would be looking for, I'm not tended to trade it back up. It could go up, but I'm not tended to trade it back up towards that 75 level. I think that we are looking at a shift towards some US dollar strength right now. So I'm looking for that selling opportunity below 7395, about 7386. You could be looking at a 20 pip stop loss for a good 60 pip take profit level towards that 7322 support level. So you're looking at a 1:3 risk reward ratio towards the downside, 60 pips to a 20 pip stop loss, or if you even took a 30 pip stop loss of 1:2 risk reward ratio, that would be fair. But give it that time to test and reject this 7395 level. Look for that break downwards before you try and sell it towards the downside. With that, the New Zealand dollar actually testing higher at this point over the last couple of hours. I'm looking for it. Same thing, same move with the Aussie. I'm looking for it to test this 7146 resistance level. What I actually would do a little bit differently for the New Zealand dollar is that, because it hasn't dropped as much as the Aussie, look at how much the Aussie has dropped by. It's gone that whole 150 pips towards the downside. Last week, the Kiwi overall has only gone about 100 to the maximum. With the way it's moving, I think that I would like to see it test at 7146 before deciding whether we could see both either an upside or a downside move. Likelihood at this point is we might do a speculative trade towards the upside. I don't think it'll go all the way up. I think you could be looking for a bit of a shorter term trade, 20 pip stop loss, 40 pip take profit level towards the last recent high. So you're still looking at a 1:2 risk reward ratio towards the upside. Gives you a bit of that difference between the Aussie looking for a sell opportunity, the Kiwi looking for a buying opportunity, both dependent on the reaction at 7146 and the 7395 level for the Aussie and the Kiwi dollar. So a bit of a difference, a bit of a different approach on both the Aussie and the Kiwi. They're not moving terribly in line with each other at this point. So you can also take opportunity with that, but also look for that quick trade. I think they will snap back into correlation very quickly. So any trades you're going to get into, make sure you take it for the short term into those two pairs. I do have Imran messaging me asking about my euro and the pound view. I will do that, Imran, tomorrow for the euro and pound on Wednesday. If you do have any specific questions, put it into the club platform and I will answer you on the club platform there, but I can't go through all the pairs. So with that, I'll pass it back to you, Scott.
Thanks, Jin, and just everyone in the club as well. I have shared the Aussie and the Kiwi trade ideas as well, just in a summary form in the discussion section there. So make sure you do watch the video as well when it, if you didn't get a chance properly to watch the full thing, just to get context on when to take the trades, just in regards to the timing of the news releases coming out this week. But that is that, guys. And we were just talking, Jin and I, before the call. So far in the trading month, the Forex briefcase account is up 1.8% with another 2 weeks or so to go. So if you are looking to get invested with Forex briefcase, we've got the Forex briefcase chat as well in the club as well. And we would love to get some more of you involved in that. It's been really great. We're well over 20% for the year so far. But that is it, guys. That's Monday's call. Hope to see everyone in the Traders Club as well. Thanks for watching. And I hope to see everyone again tomorrow. Bye, guys. Thanks for watching.